Hello, everybody. So the stocks are on fire. I'm covering a lot of stocks today. Big gains. But first of all, let's celebrate. Let's look at the fact that we are now up year to date. Officially, the Nasdaq is up 1% year to date. The S&P is actually slightly in the green if you look year to date, but not 1%, not quite. And the Nasdaq, of course, is yet again outperforming the S&P. And, we're getting used to this. I think the Nasdaq is now on a trajectory of being consistently a better performing asset than the S&P. For example, the Nasdaq has strategy. For example, the Nasdaq has Hood. For example, the Nasdaq has had Coinbase in it for the longest time. This index is a much better index than the S&P. That's just me. No financial advice, but I love very much the Nasdaq, and the S&P makes me cringe when I see what happened to UNH, for example. It's about keeping losers in. Anyways, let's talk about the stocks. Let's talk about the first stock that was way up today is HIMS. HIMS is back at $64. We are not quite at all-time high. All-time high close was $68, but we're near all-time highs again. As you know, HIMS is a channel favorite. This is a roller coaster that we've been riding since $6, and this has been frankly a very enjoyable ride because we never really came back to the 6 or the 5s. So it's been a very enjoyable ride, and in the comment section we've been having fun. You tell me, oh, see you back at 20, see you back at 70. Well, let me continue the fun and tell you that HIMS could be back into the $30 in 2 weeks or in 2 months or never. I don't know. The market is having a very hard time valuing this stock. All I can tell you is that this stock, in my view, is very, very cheap compared to the 200 plus stocks I follow. And it's on a roller coaster as the market is having a hard time figuring out whether HIMS is going to win or whether insurance and United Healthcare is the way. And HIMS, of course, is a heavily shorted stock, which does not help with the price swings and the valuation swings. It is really a roller coaster of a stock, but of course, the revenue is not a roller coaster. The revenue is only one way, and it is up. And it has inflected to the upside since the addition of GLPs to HIMS. Let's talk briefly about HIMS. Of course, it's volatile. A lot of people on my channel like to do options on HIMS. Do it at your own risk on this one. This is really the one you gotta be careful with, I think, if you're gonna do options on. But anyways, I want to talk briefly about the pair, about the LifeMD HIMS pair. This is the main takeaway that I have for this stock. I now think LifeMD is cheaper again. You may remember 3 weeks ago I told you I prefer HIMS. Now I still prefer LifeMD because LifeMD is back at 8. LifeMD, 52 weeks is minus 8% performance. HIMS, 52 weeks performance is a 4 times your money, right? So now when I look at the pair again, I tell myself, okay, well, HIMS maybe got a little bit ahead of itself, especially when you consider the fact that, LifeMD, of course, much smaller company, right? 387 million market cap against $14 billion market cap, but LifeMD, much smaller business. Everything's smaller. LifeMD is a baby HIMS. But frankly, they have compelling product. The one video that I'm going to make about LifeMD at some point is about their LifeMD Plus program, where you get your physical and you also get urgent care and you also get prescriptions and refills and all of that for $19 a month. That's literally the price of Netflix. The Netflix of doctors is implemented by these two companies, but it seems like LifeMD is doubling down on this idea of a monthly subscription for doctor access. I think this is going to be a huge deal going forward. And when I look at the valuation of LifeMD versus HIMS, LifeMD is almost looking 3 times as cheap as HIMS for, frankly, actually a higher EBITDA margin, but pretty similar gross margin and pretty similar profitability profile as a whole. And you may say, oh, well, LifeMD is actually growing at 28%. Actually, when you look under the hood of LifeMD, you will know that LifeMD is growing much faster than that. LifeMD is growing at about 60% next 12 months. So it's growing maybe slightly lower than what HIMS is going to grow, but not that much lower. The reason why this shows 28% is because they have WorkSimpli, which is a software business, an unrelated business that they have to spin off at some point. I think the overhang of having to divest WorkSimpli at some point is what gives lower stock price to LifeMD. But at some point, the story of LifeMD to Wall Street will be explained more clearly. Anyways, I find LifeMD now to be the cheaper price, and my future buys in this sector right now are going to go to LifeMD, unless, of course, in 3 weeks, HIMS is back at $40, and in which case, then I'll need to reassess and reanalyze. But definitely, we're back for HIMS. We're celebrating. When you, as Sailor would say, when you own the superior asset, it's going on forever. It's going up forever when you own the superior asset. In the telehealth field, nearly 50% market shares, that's HIMS and hers. Going international with $800 million of debt, that's HIMS and hers. Doubling down on AI, doubling down on personalization, doubling down on ads, that's HIMS and hers. To me, HIMS and hers is an ideal candidate for a stock that I want to own for the next 10 years. Someday, sooner than later, this will be a $200 stock. Mark my words, because 0.15 on enterprise value over growth, profit over revenue growth is a very cheap price for a company who is still growing with SaaS and who has increased the growth rate. So HIMS is a high-quality company at a very, very cheap price. LifeMD is a decent quality company at an even cheaper price. That's how I would compare these two. Moving on to Supermicro. So as you know, Supermicro I started covering almost a year ago now. I've been, after the big drop is when so less than a year ago, like 10 months, 9 months ago, is when I started covering Supermicro. I've been faithful to Supermicro. Supermicro, the reaction in the comment section has been kind of a reverse Misty. Whenever I say anything good about Supermicro, people whine and people get upset. And they're like, Supermicro, bad, accounting issue, bad. No matter how many times the CEO has to say, no, there's no accounting issues. No matter how many times the auditor, BDO, hired by this company, no matter how many times they say there is no issue, people are still like whining and saying, oh, there's issues. Anyways, Supermicro is what I like to call a KISS stock. What is a KISS stock? It's a keep it simple, stupid stock. Let me tell you what I think about Supermicro. Question number 1. Is liquid cooling the future of data centers? Yes. We're not going to use fans anymore now that we have electricity constraint. Right? Electricity is the limiting factor of a data center. So we need liquid cooling. Who has capacity to liquid cool giant data centers? Dell and SMCI. Is it a duopoly? Essentially, they're the only two out there, right? What about Blackwell? Does the Blackwell delay mean that the orders for SMCI's, liquid cooled servers, does it mean that the orders are going to be delayed forever or canceled? No, it's not canceled. Like AI is moving forward. It's really just a delay. AI is moving forward. It is still a race. The race is still on, and therefore, once I answered all of these questions, liquid cooling is the future. There's only 2 people that can do liquid cooling, and really, Blackwell is gonna happen. It's at this point nearly a certainty that it's going to happen. I don't want to say it's a certainty because no financial advice, but it's a certainty in my mind that it's going to happen. So yes, you got a no-brainer, and then you got a stock, of course, that is 18% on the day. This stock is still undervalued at $38 or $39. People can whine all they want. This stock is still undervalued. You have a rule of 40 at the 69. EV over GP over RG is in line with HIMS, except the main difference between HIMS and Supermicro is that HIMS is in the healthcare sector, which is a sector that everybody seems to hate right now, and Supermicro is in the AI sector, which is a sector that everybody loves right now. So I cannot understand the valuation of this. By the way, I still find NVIDIA pretty cheap. NVIDIA did really well today, and I still find NVIDIA pretty cheap. I've praised NVIDIA stock as cheap for a while now too. So this sector of AI is actually, in my view, being underpriced in the market compared to, well, many of the stocks we find on the S&P 500. Anyways, let me move on. Moving on to Robinhood. So Robinhood's rise has been pretty stunning. It is now at $62. And I think the market is realizing this. YouTube X is realizing this. A lot of people have covered this. I wanted to cover it, but I don't want to get the SoFi hate. So a lot of people are saying is Robinhood becoming a SoFi without the credit part, right? And I think that's a fair thing to say. Is Robinhood becoming a SoFi without the bank part? And I think it's a smart thing to say, especially as they're launching banking in the fall, right? I'm on the wait list. I want to be part of the private banking offering of Robinhood. That seems pretty darn good what they're going to offer in the fall. They're entering banking, and you don't have that personal finance, personal loan, that credit overhang that, say, SoFi suffers from, you don't have at Robinhood, right? And you can move very fast because you're not a bank. And so it seems like Robinhood is a SoFi without everything Wall Street doesn't like about SoFi. And in addition to that, while SoFi exited the business of crypto, Robinhood is in the crypto business, and they're doubling down on the crypto business. They acquired WonderFi, which has big operations in Canada and in Australia, and they're launching in Southeast Asia, actually. So they're getting global exposure through this acquisition. The market seems to have liked this acquisition a lot. It doesn't seem that expensive, paying $179 million for a company of $62 million of revenue, but growing at 100%. It grew 100% compared to 2023. So WonderFi seems like it wasn't too expensive of a price. And, of course, Robinhood was trading low. It was in the gutter because of a GME debacle. And this, by the way, is the same thing that's going to happen to Tesla, I firmly believe. Is companies can have a bad reputation. I'm not saying Tesla has a bad reputation, but a lot of customers don't want to buy Teslas because of Elon Musk anymore. In my view, in the mind of people, these things fade away, right? We don't hear Robinhood hate as much as we did 2 years ago in the wake of the GME, the GameStop debacle. We don't hear that hate. We don't hear, they took away the buy button. We don't hear that anymore because investors forget. They have a few months of remembrance. They remember for things for like a few months, maybe a year max. They forget. And so that's why I think we're seeing the Robinhood stock take off, and we're really seeing now a major delta in the performance of these two, which was not there for the bulk of the past 3 to 4 years. For the bulk of the past 3 to 4 years, these stocks, for at least 2 years, they were trading line in line. And look at the take of, say, a Robinhood compared to a SoFi. Robinhood average annual return is 40%. SoFi is minus 3%. SoFi is not back at the 2022 level, and Robinhood smoked its 2022 levels, even though it did do a detour around the around the $10 price. So anyways, I think we're seeing a dislocation between these two. I think the market clearly prefers Hood. Of course, SoFi is less expensive and it's cheaper on paper. But then when you look at the numbers, you can't deny, EBITDA margin is 49%, gross margin is 91%. So Robinhood is essentially pure profit. And the company's growth is reaccelerating. Crypto probably has a little bit to do with that, but it's expected to grow at 31% next 12 months. Their 2% match and their IRA match program is nothing short of amazing. I know so many people, so many of my viewers took advantage of the free 2% to move money to Robinhood. That was a major hit. And enterprise value over gross profit over revenue growth is a 0.53. So you're in line with what, say, Nvidia would trade at. So it's really not that expensive, right? A lot of the stocks in my spreadsheet that I would never buy are trading in the ones, the twos, the threes. Your random stock on the S&P is trading in the ones, the twos, the threes. This is trading at 0.53. So if you adjust for growth, I find this stock to be quite cheap. I'm happy to own this stock as well. And by the way, of course, I own all of the stocks that I cover today. Every single stocks that I cover today is stocks that I'm invested in, right? Otherwise, I wouldn't say it's a big gain. No, it's a big gain. So let's talk about Coinbase. And I don't have too much to say about Coinbase. They bought Deribit. It's great. They're going to make so much money with USDC, especially if USDC becomes compliant in Europe and is going to be the only stablecoin in Europe. That's great. They're pretty much a proxy for Ethereum now. They took all of the money from Ethereum because they operate Base. That's great. They have all of the ETF business. They earn the fees on all of these ETFs. That's great. They're the number one institutional desk. Coinbase has so much going for it. this is not the point that I want to make in this video. This is not a Coinbase praise or a Coinbase criticizing video. No. And of course, I'm very happy that Coinbase is added to the S&P 500. That is great. They're up 28% on this news, as they should. But this is really a flag on the S&P 500. Because of accounting gimmicks, not gimmicks, but issues, because of gap accounting, essentially, because of, I'm going to say it like this, because of accounting dogma, right, MicroStrategy is not in the S&P 500, right? It's not in the S&P 500 because you got to follow these rules. But you know what? Next quarter, if Bitcoin is up this much, they should be up for inclusion in the S&P 500 MicroStrategy at the next quarter. If Bitcoin stays up and keeps going up, they should be. But will they? I bet you they won't. Because they have to go through a committee. Not only is the S&P a criteria which frankly is outdated to be included in the S&P, but also you have to go past a committee. And so this flabbergates me. There's no overword, because you have MicroStrategy, a $115 billion company, frankly not that expensive on a price to NAV basis, and it's excluded from the S&P. And you have Coinbase, good for Coinbase. I'm very happy for Coinbase, but Coinbase, you technically took the spot of MicroStrategy, right? That should have been MicroStrategy in there. So anyways, and of course, look, Coinbase, I have little doubt Coinbase is going to perform, not as good as MicroStrategy, but it's going to be a good performance. I mean, they are at the forefront of what they do. But nonetheless, if you look at the performance and if you look at the picks of the S&P to be added, you got to ask yourself what's going on, because Coinbase average annual return past 4 years minus 10%, right? MicroStrategy average annual return past 4 years 52%. 52% average annual return every year for the past 4 years. Minus 10% for the past 4 years. And you add the one that did minus 10% because it fits your rules. Because your rules work on coin, but your rules don't work on MSTR. So this is when people say, oh, MSTR needs to promote itself a little more, it really needs to, because the TradFi gives MicroStrategy absolutely no respect. And frankly, this doesn't teach us anything about Coinbase. This doesn't teach us anything about MicroStrategy. These two companies I find great. I obviously prefer MicroStrategy, but I find Coinbase more than honorable. It teaches us much about the S&P, much more about the S&P. We learn much more about the S&P 500. And what do we learn about the S&P 500? That it's really not the relevant index. The NASDAQ is the relevant index nowadays. The NASDAQ is the relevant index. Why? Because the NASDAQ only uses market cap. The NASDAQ already has Robinhood is already included in the NASDAQ. It captured all of the upside, right? The NASDAQ has been capturing the upside of MicroStrategy ever since November of last year, was it? The NASDAQ 100 at least. So anyways, S&P just keeps the losers in and avoids the winner. It's kind of the way I look at it, because, look at the underperformance of S&P. Look at, this is United Health, right? So S&P is, a safe grandfather's investment, the S&P. This is United Health. Look, minus 49%. I use December 4. It's actually down nearly minus 50% in 3 weeks if I were to have taken this point, which is, I should have had an impact in the video. The point I'm trying to tell you is that the stock dropped 50% in next to no time. And this is not the first time. You may remember Schwab. Schwab did that too at one point during the Silicon Valley Bank debacle. Oh, you remember the Silicon Valley Bank? It literally got erased of the S&P 500. So the S&P 500 is a machine that seems to keep the losers in and avoids the winner and leaves the winner on the side, because MicroStrategy is the winner and it's left on the side. Coinbase, I have little doubt, is going to be a winner, but objectively, Coinbase hasn't shined too much over the past 4 years, and it's been added. So it's like, anyways, and I'll conclude with another stock, a final stock. Another stock which was added very late to the S&P 500, and of course that stock is Tesla. And if you want to know why it was late to be added to the S&P Tesla, it's because they didn't have enough car models. They didn't have enough car models to be added to the S&P. Yeah, it's probably because they had way too many old auto industries in the space, and they were like, let's keep them out because, we can't have too many auto stocks. At least that's my take on it. They said they didn't have enough car models. And of course, what's the valuation of Tesla hanging on to, right? Is it hanging on to cars? Are we going to own cars in the future? I've done the calculation again and again and again. And I keep discussing this, with friends and family, which is, I've come to the conclusion that it literally makes no sense anymore to drive. It just, because Uber has become too cheap, and insurance has become too expensive, and auto. I mean, I have an old car that's like, my car is like worth $5,000 or something, so I don't care. I'm gonna drive it into the ground, but it's pointless. Like I think Ubering everywhere is in a big city today. It's like cheaper than everything. It's like cheaper than everything. So I'm always thinking, like, should I buy a Tesla? Should I buy a Tesla? Well, guess what? I'm not gonna buy a brand new Tesla. I think my next car is no car. I think my next car is just robotaxi everywhere and Uber everywhere. And so that's the 10x story in Tesla right there, of course. And of course, they're not focusing on selling cars because they can just print cars and turn them into quote unquote public transportation, one-to-one public transportation, one-to-one marketing, making its way again to the world of business. HIMS is doing one-to-one medications. Tesla is doing one-to-one point A to point B transportations. Anyways, it makes so much sense to me. And of course, we shouldn't even talk about that, right? We should talk about this. This is what we should talk about. And maybe the stock is up because of that reason today. I don't know. But this is Gorklon Rust, one of the most followed persons on the internet. And he posted this video, and I cannot believe it. I played it like 10 times. I cannot believe it. He dances more smoothly than I ever will be. He or her, I don't know the gender of Optimus, doesn't matter. Anyways, Optimus dances better than I ever will dance. That's it. Like it's like, this is absolutely insane. That little white thing is just tethered. Like ask yourself, like this is a real video. This is a real video. Right? So imagine this and slap just a 1% probability of the Optimus vision working out. And then come back and tell me Tesla is only worth $1 trillion. Like, this is insane. This is just like embodied AI is gonna be a thing. And this is not just a Tesla thing, right? You have Figure AI, who's also doing very well. And you have, of course, Groot and NVIDIA, who's tripling down on the investments on this. Watch the head of embodied AI did a stunning presentation. He did a stunning presentation at Sequoia Capital, talking about how they envision embodied AI and how it's really going to happen with NVIDIA. So there's going to be a few key players in embodied AI. And I think if you just slap a 1% chance, like this stock in my view is going to be one of the most valuable companies out there, and that's why it's a top position, not as big as MicroStrategy, but it's a top position. And of course, they own Bitcoin too, right? Tesla is anyways. Everything collides. Everything comes into place, and of course they were snubbed by the S&P 500 for 5 years. So everything comes into place. I hope we can connect the dots. I hope you help connect the dots. You help me understand how I connect the dots on this channel. Anyways. This was not investment advice. This is not financial advice. This is just entertainment. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.